Stocks are trending down today before the market opens, and let's find out why. Let's jump right into it, guys. I mean, the futures right now are looking pretty red. We have the Dow down about 1.4%, the S&P 500 down 1.3%, the Nasdaq 1.3%, Russell, right? Some of the small caps are down 2%. So things are definitely looking a bit red today. So I'm gonna take a look at what's happening in the market, and I'm also just gonna share my overall thoughts as a long-term investor. So the most important, and I want to say the biggest thing or the biggest news impacting is right now there has been an overall increase of COVID concerns resurfacing. For example, in Tokyo, it was in Japan, they declared a state of emergency in Tokyo for the upcoming Summer Olympics, and as countries deal with the rebound in COVID cases due to the variants. So that's the major reason stock price is down. A lot of the pre-market losers are the ones that would benefit from the overall COVID going down. So we have companies like Carnival Corporation down 5.23% pre-market, almost 4.9 now that I reset. We have United Airlines, right? They're also down 3.3% pre-market. So it seems like these reopening plays are going to be taking quite a hit. I'm going to take a look at some not in the reopening play, right? Let's take a quick look at Zoom. I just want to see Zoom is also down 2.82%. So right, just the overall market itself, I want to see if there was a difference between closed or more working from home, more being at home type companies, but no, there also seem to be down. The second thing we're going to talk about is U.S. weekly jobless claims. They came out earlier today around 8:30. This is when they released. And I mean, we're going to look at the graphs. Obviously, the first points always tend to be a little more stronger or heavier, in my opinion, more clickbaity than intended. So initial filings for unemployment insurance unexpectedly rose last week. A possible hint that the rapid job growth seen the first half of 2021 could face hurdles. I mean, the beginning of 2021, we're going to see there were a huge amount of job growth, but I don't necessarily find it too bearish right now. First-time jobless claims totaled 373,000 for the week ended July 3rd, compared to the estimate, right? So estimates of first-time jobless claims were also higher than expected. A little bearish in there, but again, we're going to look at the charts, and I don't think it's too scary. The level of continuing claims, though, is down 145,000 from the previous week revised level. So if we take a look at initial claims for unemployment insurance, first, I want to show where we were before COVID. So pre-COVID, we were in like the low 200,000s. So 216, 218. You can see at that peak, it was insane. Now things are looking about 373,000 as in the most recent week, right, for July. So obviously, we're a lot higher than we were in February pre-COVID, but we are getting there, right? And we're seeing a nice overall trend down. If we take a look at continuing claims for unemployment insurance, right, we see in pre-COVID we were at like around 1.7, low 1.7 millions. Now we are at 3.34 million. Again, in the initial part of the year, right, you just see this huge growth down or trend down, and then things starts to settle back in. So obviously we are ways away from where we were pre-COVID level, but things are still down trending. So unfortunately, it does seem like the growth is slowing down. So for us to ever get back to those levels, I think will take a nice amount of time. Let's take a look at what's happening in the crypto market. So Bitcoin right now is 24-hour change is down about 6.11%. It's currently sitting at 32,000. That's just a few hours ago. It was again at 34.6. In the past week, it peaked at as high as 35.8 thousand. So we can see it's been very volatile in just the past week alone. But this is what's normally it's becoming a normal for crypto, right? This huge volatility. Some other thing that's happening, right? There's a lot of news to kind of unpack today. China signals easier monetary policies, and this is kind of reviving worries about a weaker growth in China, right? This is not affecting the United States, but they are expecting a weaker growth in China. So top executive body said late Wednesday that central banks would stimulate the economy with cuts to the amounts of fund banks needed to hold in reserves. Right, they need to stimulate the economy again. So they think that this policy signal suggests the economy is likely slowed down in June. So I want to say it might impact some of the Chinese stocks right now. Let's just take a quick look. Let's find BABA right now. So BABA stock is down about 3% pre-market. JD stock is down about 3% pre-market, right? And this is after a heavy decline. In the past 5 days, right, JD is down 7.79%, not including today's pre-market. Alibaba is down 8.3%, not including the extra 3% from today's pre-market. So you can see definitely happening a lot. All right, and now let's just, I also wanted to take a look at just how overall stocks were doing. So Bank of America, right, this is down about 2.9, so almost 3% pre-market, and we have JP Morgan down 1.8%. We even have some big tech names, right? Apple is down 1.8, and we have AMD stock, one of my favorite semiconductors, down 3% right now. I mean, I'm not gonna lie, as a long-term investor, things like this is what I don't mind, right? It's counterintuitive, right? You would think, me as a long-term investor, I want my portfolio to keep going up, but I like adding to my portfolio every single week. So I enjoy when prices are down, especially for me. I have that long-term in mind. I have plenty of time in my side. So buying right now, I do expect prices 5 years from now to be a lot higher than they're at now. So I welcome a red day, and most long-term investors should. Obviously, it sucks, right? It definitely sucks to see your portfolio on the red. My portfolio is probably going to be pretty red on the open today. But again, that's okay. I wasn't expecting to taking out my cash today. I'm not expecting to taking out my cash from my account in the next year, in the next 2 or 3 years. So I don't really care what happens today in form of price, but I was planning on putting money into my account today. So I'm happy to see red, right? And for me, long-term investments, I'm still happy, and I'm still focusing on the companies I like to focus. So I hope you guys take care, have a good day, and feel free to join the live stream. I will be on in about an hour or so. So take care.